Hello, everyone. My name is Todd Screaman, and I'm CEO of Summit Funding and also a wholesale company called Lead Plus Wholesale. And this video is mainly meant for past clients of Summit Funding and Lead Plus because there is a phenomenon going on that I want everyone to know about. And I want to illustrate this through a little bit of a story on an actual client that we helped with some strategy. As everyone knows, most Americans have around 3% interest rates on their mortgages. So Summit went out a couple of years ago and we did some deals with some life insurance companies to hold second mortgages and to do them at fairly low rates. And I'm going to show you what this did for one client because I think it's a big miss for a lot of people. You'll have to bear with my heavy duty wonderful visuals here, but I call this the biggest miss in wealth building. How Mike and Mary save $500 a month less in taxes, lowered their overall payments by over $1,800 per month, and put $672,000 into their 401k. So here was their scenario. So this is Mike and Mary. They bought a home 4 years ago for $600,000. They've got a 3% interest rate on a 30-year fixed mortgage. And their total principal and interest mortgage payment is a little over $2,500 a month. Now, they had a little over $100,000 in credit cards, car loans, and personal loans, where their monthly payments were $2,600 per month at an average interest rate of 11.8%. We gave them a $100,000 second mortgage at 8.25% fixed rate with a payment of $746 a month. So that obviously lowered their payments from $2,600 a month to $746. But here's a few things that you may not know. So first of all, Mike and Mary's blended rate on all of their debt now went from 3% to 3.9%. That's a lot cheaper than over 11%. Okay, so their $100,000 in personal debt is now tax deductible. Now you should always check this with your CPA. But that money is tax deductible off of your tax return. So that made all of their debt tax deductible. Well, at a 30% tax bracket, which is where they were, they saved $206 a month in taxes. Their total payments went from $5,100 a month for their mortgage and their debt to $3,269, which is $1,854 in savings and payments a month, not counting the additional $206 a month in taxes that they saved. So now Mike and Mary increased their contribution to their 401k by $1,000 a month. Remember, they're saving $1,800 plus $200. So if that money grows over 20 years at 9% compound interest, then they save another $300 a month in tax savings, as contributions to your 401k are not taxed. So that saves them another $300 a month. And this money grows to $672,000 in their 401k that they wouldn't have had. So now, in addition to this, there's obviously some emotional wins because they don't have the bickering about money. We don't have the monkey on our back. And they just have a lot more freedom, and they also know that they're saving for retirement. So stop paying high interest rate, take advantage of your low rate first, and leverage it to build long-term wealth as your house continues to grow in value. And that's really the whole idea of this simple strategy. Now, if you call a Summit Funding loan officer or what other loan officer sent this to you, then you can have this specific conversation adapted to you. And I think that when you add all these things together, it's for sure the smart way to build wealth. And it's no secret that Americans' debt is at an all-time high. And we also have an all-time record of equity in our homes. When you take advantage of that, this is what this can look like. So call your loan officer and find out what your scenario looks like for you today and take advantage of this. Hope it helps. And I hope that you do business with Summit again. Thank you. Have a beautiful day.